Hello everyone and welcome back for my final daily report market video with me, Richard Perry, market analyst at Hantec on Thursday 4th of July. Let's look at gold, which interestingly in the last couple of days has had a pretty wild ride actually, hasn't it? Had that sharp move, starting beginning of this week, we had a big gap lower, we had that sharp rebound and then continued but then fell into the close with a negative candlestick, and then again fallen today, $5 down on the day. Very, very volatile in the last few days then, and it means that market is difficult to read. I think ultimately gold is going to be going higher with the long-term outlook, fundamental outlook of central banks' loose monetary policy around the world. I think that's going to be supportive for gold going forward. However, on the near-term basis, I think gold is very difficult to really play because obviously we've got all these choppy moves in the last couple of weeks really now playing around. I've drawn in this uptrend today, and that uptrend comes in at 1390. So there is actually room for a bit more of a slip back and still to be a buy into weakness on gold. But you've got these momentum indicators, and I've sort of noted the fact that it picked up from 60, but is it rolling over again? And if you see the rollover, is that rollover going to then break below 60? If it were to, you'd be looking a little bit more negatively or correctively, I would add, on that. And you've also got these MACD lines. Are they coming together? Are they about to cross lower? Is another cautious signal there. Stochastics are okay at the moment, but again, I'd be a little bit concerned. Up until the early part, up until Tuesday, I was still calling for further corrective move on gold, maybe back to the 1350s area. And I'm still not going to rule that out, given the fact that we saw that failure at 1439, 1436 was the rebound before it's turned lower. And again, I think that the signals that we're getting off gold are not 100% positive by any means. So I don't think we can really take a gold rally as a given. You can see in the hourly chart we've just unwound back again from the move to 1436, and you've now sort of posted a lower high at 1421, which actually produces this little near-term negative pivot, which provides resistance, and the market is just again under a little bit of a slippage move today. I don't expect to see too much direction given the fact that there's the lack of US trading and also in front of payrolls, and payrolls ultimately is likely to produce a bit of a directional move, a key directional move for gold, so the market may well be fairly quiet in front of that and then take direction off that payrolls report. But again, lots of mixed signals you could argue in the last couple of weeks on gold. But for now, trading above $1,400, which is a key psychological level, I think you're still fairly positive, and above the uptrend as well. But again, just watch out for these momentum signals. So with that in mind, I wish you good luck in your trading today, and I will speak to you again for Payrolls Friday tomorrow.